and record.
Okay, today we have Shante Duffy to speak to us for the Michigan Note Investor Forum. We're very excited to have you, Shante, and why don't you take it away and tell us a little bit about yourself, as well as we have a few questions for you, and this is very open, so if you'd like to just ask a question, just speak up, and you will get a wealth of knowledge tonight about servicing mortgage notes. And go ahead.
So I'm Shante Duffy. I am currently the VP of Operations and one of the owners of BIFI Loan Servicing. We are a mortgage loan servicing company. We are brand new, just about a year old now. I've been in the servicing space so for a little over 9 years. That is my background in this note world as a whole, in anything real estate related. Total transparency, I started in this space just because I do have a 10-year-old son. I was not cut out to be a stay-at-home mom. Back when, he was born, I stayed home for a year and I was like, yeah, this isn't for me. So I did decide I want to go back into the work field, and I needed something close to home. That was genuinely my criteria back then. I wanted, nights and weekends off, and I found a servicing company. Didn't know anything about it. Most I knew about mortgages is if you don't pay it, you get foreclosed on. Had no idea there's, private investors, small hedge funds. I just assumed it was big banks like Bank of America, Wells Fargo, things like that. So all of my knowledge has been hands-on. I've learned as I've grown and as time has gone on. So I've learned to love this space. I've also learned to be like everybody else and start investing myself, which was super important and something I just, recently started doing. It was a promise I made that I would get my own note before today, my birthday. So
did you do it?
Here I am. Yeah, I did. And I'm looking at a second one right now. So
awesome.
It's all good. It's kind of long time coming, but it's better late than never.
Great.
So.
Congratulations. I mean, for you to get your first note, everything about it. So for you, it's like that whole process of boarding and having the loan, and it probably would be easy.
Yes,
easy
that was the easy
part. Right?
Where I struggled was the bidding, and really just probably that. Everything else, I understand the due diligence side, ordering title, BPOs,
right.
Things like that.
Right.
So,
Shante, why don't you make are you the main screen? Is everybody seeing her just as the main screen, or they just see the slide? Because I want to make sure you can see her as the main top. Maybe you could just take this.
This it? Yes, no, change, different.
All right. Yeah. I just want to make sure you could see her as the main speaker. Anyways, we can still keep going. So I asked Phil, okay, here's a few questions. We need to have a few questions, but I started reminiscing in our, last 4 years of notes. We've had 5 different servicers, and all 5 have had different strengths and weaknesses, but our favorites, we tend to stay with our favorites because it's what we know. And you were at Madison Management when we first started, and, the portal was helpful. The customer service was super essential. And then the ability to get someone on the phone that you could ask questions about and, run your own payoff report. So like just this week, we got the note from Madison saying, please confirm the payoff. So evidently one of our notes that we bought at a discount is paying off, which means you get 100% of the unpaid balance. And we bought this note at like 50 cents on the dollar. So I am super geeked up about this payoff. So, but the servicer has all the numbers, and they're the communicators. So why don't you just talk to them a little bit about what different roles a servicer takes for someone like me, who is a small, I'm the bank, but I'm a small note holder. So tell us a little bit about what roles the servicer takes.
Servicers are actually really key in note investing. They are extremely essential. I know a lot of people hear different, mixed emotions and comments and things like that, but whether you like it or not, you essentially need a servicer. Our job is to keep your loan in compliance. That requires us to follow federal and state law, depending on where that property is located. Laws are different. There are what sounds like very small requirements. They are mandatory. Your borrowers should always be receiving monthly statements on how much they owe, whether they're contractually current, which means, they're due for this month or the next upcoming month, or if they're, non-performing and they're due for 2020. Your servicer is one that's tracking all the loan figures, the due dates, all the payments that have been made. That is your servicer's main core job. Process payments, escrow services. We do, most servicers do pay out taxes and insurance as part of most people's mortgage payments. So as a servicer, you're paying your mortgage payment to us. Our job is to send out statements, process payments, disperse those funds back to you. Tax reporting is super, super important because borrowers do receive, you guys as lenders as well as borrowers should be receiving either 1098 or 1099 tax forms at the end of every year to file with your taxes for all the interest either the borrower has paid or you guys being the investor or the lenders that you guys have received. Your servicer tracks everything. That they have servicing software. That is the software of record that keeps all of that information, private information of the borrower. That's the original loan amount, the next due date, the first payment date, the maturity date, when the loan is completely due and payable in full, how much their principal and interest payments are, how to track what their escrow payment amount is, if there's any late charges, or if you guys as lenders have advanced any funds, which could be, to save anything from going to tax sale, paying to reinstate homeowners insurance. If you had to take any legal action, obtain an attorney, you're allowed to charge those fees back to the borrower. So that is our job, to keep a clean and precise record. There's no error, it's history. If a borrower ever fights it, you have to go to your servicer and say, I need all this proof. We have it. That is our job. Most importantly, that is our job. There's a ton of little things that kind of go on behind the scenes. But you need a servicer to kind of keep your loan within compliance, make sure that your borrowers are getting everything that they need that is required by all laws and regulations. That is why we are so important.
Right.
We also act as the middleman. You guys as lenders.
I wanted to ask a quick question about like following the laws and the rules. So why would someone like me, let's say who has a note, want to pick up the phone and say, hey, Mr. Smith, you didn't pay last month and I want to know when you're going to pay or what's going on? Like what are some of the risks of me who's the bank calling Mr. Smith up when they haven't paid or asking about an escrow amount or something?
The number one risk when you as lenders are calling your borrowers is you most likely are not trained in fair debt collection practices at all. Every servicer is mandated in order for us to keep our licenses to be trained. Everybody on my staff is trained as well. So out of the gate, it sounds very common sense, like, you can't harass borrowers, you can't be disrespectful, but we have to remember, you guys are putting money up, whether it's your money or an investor's money. And there is an emotional tie when there's money involved. And then remember, these borrowers are the ones living in these homes. So when they're in these homes, they have their own emotional tie. So if they're not performing and there's the, threat of foreclosure, these borrowers become a little, nervous and worked up and emotions are running high. And then you guys on the lender's side, you're like, wait a minute, but you owe this money. It's written in your contract. So the biggest risk is not being trained. And it's just as simple as, how do you identify who you're speaking with? Melanie, you can call and ask for Shante Duffy, but do you really know it's me that's answering? I could have my sister answer and she could easily be like, oh yeah, I'm Shante. And then you're releasing, personal information to someone who's not authorized, or I never gave my authorization to. So that's number one. Of course, again, you can't harass anybody. There's a certain amount of times you can call, what you can say, what you can leave on a voicemail. Most lenders don't have that training. Granted, you can find this training anywhere. It is available online. It's just kind of like a course. I highly don't recommend it. So servicers, and it's always been my rule of thumb, servicers and all the borrowers, but it's always good to kind of have that middleman in between you guys being the lender and the homeowners. It's just safer, it's cleaner, and all of our calls and conversations are recorded. So if there is ever a borrower that's fighting anything, we have every call recording. We document everything we do as well. Servicers keep records. That's what we do. So it's all documented. And I've had too many investors over the years who are like, no, I'll just do it myself. And I get it. There's cost to servicing. Nothing in this world is free. And I can understand some of those issues, but I've had investors completely lose their note by getting sued by borrowers, and the borrowers kind of get to walk away with the house scot-free, and then there you guys go, losing out on your investment. So it's not worth it. And these borrowers are very savvy. They continue to surprise me, 9+ years later.
Right.
So.
Right. So imagine, go ahead, Michael.
Yeah, I mean, I got probably 3 questions I'd like to ask. First, do you handle them? Because a lot of people with notes they're directed through a self-directed IRA.
Yep. We work with a lot of self-directed IRAs. Most servicers do. Most servicers in, my space, in my world, we do. That's just kind of that's how you're buying your note. So that's the entity that you would set up with your servicer. So if I don't know who your custodian is that you use, but you would set up your account with your servicer under your IRA name, because that name that you set up with your servicer has to match how you're buying the loan. They have to match. So if I bought a note that says Shante Duffy, my chain of title better end up reading Shante Duffy. If it's my IRA though, through like Quest or Equity Trust or NewView, I need to have the NewView name set up with a servicer, because that's what's going to match on the chain of title. But everybody works with IRAs. Very easy to kind of get those payments out to them.
Yeah.
That's not foreign at all.
Yeah. Excellent question. And let's
The other question I had is, what is a typical percentage that a servicing company charges to do it?
Do a workout, it depends the type of loan.
No, service, just a service.
Just
It
the
depends.
service.
It depends the type of loan. If your loan is performing, and again, I worked for another servicer for 8 years and then started my own this past year. If it's a performing loan, it's pretty basic. That means the borrower is paying each month consecutively. There doesn't need to be a lot done. So those fees range from anywhere between $15 and $35, depending on if there's escrow, if it's a home equity line of credit, if it's an adjustable rate mortgage. It depends the loan type and what that servicer classifies as performing. If it's non-performing, that requires more work. That requires borrower outreach. That requires us to call the borrower, try to figure some stuff out. That's when the fees go a little bit higher, where they range anywhere between like $50 and up to about $100, depending on what servicer you go with. I always suggest call that servicer, walk through the fee schedule with them. Everybody does things a little bit differently, and they'll tell you, God forbid your borrower stops paying, those fees do switch at some point. So I highly suggest everyone get on the phone with the servicer, set up a meeting, and just kind of run through your list of questions, what they charge, when does something change from performing to non-performing fees, and vice versa, just so that you are aware.
So it can kind of change as you're moving through the life of the loan then.
Yeah, so if your borrower is paying today, but in 2 years from now, they're not paying, your fees are going to change in 2 years.
Yeah.
Okay. Oh, all right. No, I appreciate it.
Yeah.
Absolutely.
Just to understand, like if you're we have some landlords here. So if you have a landlord, you have a property manager, and they keep track of the rent roll and the payments, and they pick up the phone if something breaks down. For a bank and a servicer, they keep track of the mortgage, the taxes, the insurance. They actually pay the taxes out. If you give them when they're due, they pay them out. And yet when the borrower calls the servicer, they're not going to be fixing the toilet or anything. They're going to be maybe answering a question about the tax amount or the insurance amount that they owe. If let's say the taxes went up, they do a reanalysis of the escrow analysis, and they may have to bump up their payment to adjust their payment. So the servicer will keep track of all these numbers, and then the value of the note. So especially in the non-performing note space, when you purchase a note and it doesn't have a full pay history, because let's say the previous 2 times ago person serviced their own note, they didn't keep track of their payments, and they have a whole like history from the beginning to the end, the pay history. This decreases the value of your note if you're trying to sell it. So absolutely $30 a month is worth potentially saving you thousands, or what Shante said, the whole value of the note. If you do something wrong against, CFPB guidelines or something. So
Servicer is your buffer. Your servicer
Yeah.
job is to basically protect your asset, which is super important. One thing that a lot of people don't think about, they don't run into this problem until they have a note and they're ready to have it serviced. When you're looking at a servicer, make sure they're licensed in the state that the loan is located in, not where you are. So I live in New Jersey, but my note is actually located in the state of New York. I needed to make sure that my note is actually not even being serviced by myself, like by me. I had to put it with a licensed servicer that is able to service loans in the state of New York. We are required to be licensed in almost every state to do business. Not every servicer is 50 state licensed.
So
that's really important.
when you say license, I guess, what do you mean? I mean, what's it take to get that license? So, so somebody's kind of aware of that. I mean, that's a good point, but
Yeah. So there is something called the NMLS. I can actually open it up for you guys. Let me just share my screen really quickly. Can you guys see this?
yeah.
Okay. Every state has a servicer. So this is me. We are required to be licensed within that state for us to be able to collect borrower payments, to do the loss mitigation, which is calling the borrower outreach, to do those things. Not every servicer is actually 50. I'm not even 50 state licensed. I think there's really like 2 or 3 that in this space that I actually recommend people to go to, but every single state requires us as a servicer to maintain a license. So I always tell everybody that if you're ever not sure, every servicer has to have this information listed somewhere on their website. So this one's just mine, just because I know where it is. If you go to the NMLS Consumer Access page and you go through this process, you type in this little security thing, you search the company that you want to use. So my company is BIFI Loan Servicing. This will outline every state that I am licensed to do business in. So as you see, New York is not on here. If you have a loan in New York, you cannot send it to me. I will reject it. I will say, sorry, BIFI can't service this. This is what allows us to actually service loans in that specific state. That is part of the state regulation of a servicer.
Okay. This is significant. You guys made a lot of progress in a short amount of time. So
Yep.
I see you have Michigan first mortgage broker and second. So that means you can service seconds and first?
Yeah, so Michigan's one of the funky states that requires 2 licenses depending on if it's a senior lien or a junior lien.
Okay.
And because we see both in this space, especially Michigan, it's such a popular state.
Right.
We wanted to make sure that we got both, to not have to tell anybody like, oh, we can only service first, or things like that. Any servicer that is licensed, you can look up. So if you do not see your state here, they are not licensed. Unless the state doesn't require a license. And as of right now, the only 2 states that I am fully aware of that do not require a servicing license is the state of Virginia and the state of Delaware.
Wow. Okay.
Every other state requires us to go through a bond process. And this is why your servicer is so important, because we can't collect debt with that. It's debt collection at the end of the day.
Right.
We have to have these.
They're expensive, and they're actually very detailed to fill out. I mean, we had to do the debt collector license or something in Illinois when we had a couple notes there, and it was just like, took hours, and just the amount of information they asked for was just crazy. So let someone else do it, have someone else be your servicer. I know what we had to do this summer was we had a couple notes boarded over in Allied, And we went to Allied, they were on, and they were a little bit cheaper, you know, I think it was $18.50 for servicing. So we went, if we originated notes, we put them over there. Well, then 8 months into it, they said, oh, I'm sorry, we're not licensed in Michigan. I was like,
I
okay.
actually got dinged by the state. It is public record and knowledge. If you are
Okay.
not licensed and get caught doing business in a state that you're not licensed in, you are forced, I would be forced to send every loan in the state of Michigan away. I would be forced to pay a fine, but then that kind of messes you guys up as lenders. And when loans get transferred to different servicers, it can get messy, especially when the borrower is paying.
Right. So what happens is that if we bought a loan at, let's say, FCI,
Mhm.
if the loan was performing, we would just sort of leave it there because the borrower is getting their statements, they look the same, everything is the same, they keep paying. Well, you know, once you get comfortable with the transition, if you want to, you move it to the next, you know, where you keep most of your stuff, but then the borrower is disrupted because they think, what's happening? Who is Madison? I've been using FCI, they send me so it creates a little bit of potential disaster, you know, as far as their reaction. The other thing is that servicers can board loans incorrectly. If they don't have the right information from the last servicer, or if they didn't get everything they needed, or the escrow analysis wasn't done before or after the new tax thing happened. I mean, there's so many things. So to be on top of this and just being a team with your servicer, because like, you know, it's important for you to not just go blind, like as a lender going, oh, they have everything. You have to sort of still check on things. So why don't you share, Shante, of like, what are some best practices for like lenders that you've worked with that do a really good job at, you know, being, having loans that are serviced? Like, what are some best practices that we could follow?
My rule of thumb is whether you have one servicer or 5. Most investors have multiple, and that's totally okay. Make sure you understand how each one works. And I tell everybody, don't be afraid to ask questions. We're supposed to be the ones that are answering these questions for you. You're not supposed to know everything. But if you're not sure, your servicer should be able to at least point you in the right direction. If it's not necessarily based on that loan, or if you have questions about, you know, just anything, whether it's a legal question, we'll tell you, hey, that's an attorney question, call this attorney. I call this attorney in this state, they know me, tell them, you know, Shante sent you and that you have a question. I can't stress enough, and I've, you know, talked to many different investors over the years. It is so important to ask questions. And I've had people flat out tell me that they are just scared. They are very green, they are very new. But if you find the right person within our space, within our world, I promise you they're willing to share information and knowledge. I tell everybody, you don't have to have a single loan. You don't have to have a loan with BIFI, like with me. You have a question, send me an email, ask to get on a call. I don't, you know, I'll work any time of the day or night. I was up last night working until 3 a.m. I will do whatever I can to at least help you. You don't have to use my services, but there are general questions that, you know, the biggest complaint we hear about, you know, just servicers, we all kind of do the same thing, but we all lack somewhere. Communication is number one.
Right.
But if you as investors do not feel comfortable talking to the servicer that is servicing your loan, that's probably not the best servicer for you. You need to be comfortable, and whatever is going to make you comfortable, you need to get there. And you shouldn't be afraid to ask. Handholding is needed so you guys can grow and scale your business. That's, you know, that's always my focus. Get you guys to where you need to be, get comfortable. I mean, you know, Melanie, you did that yourself. Don't be afraid to ask questions, because at the end of the day, it's your investment. I don't have a say in what you do with that loan. All exit strategies, any options to the borrower, I don't dictate that. I have to go through you, my team, and I have to ask you, hey, your borrower can't afford their regular mortgage payment. You know, one of them lost a job, somebody passed away, they're sending their kids off to college, whatever the situation is. But it's up to you if you want to entertain other options. And we basically just kind of like negotiate. We're the middleman. We're the ones that are just talking for you. But you have to stay in communication, because we can't do anything without you guys either.
All right. So I'll just share something that's happening right now is we have one of our loans that went non-performing, and we had a very good experienced through COVID, and we were sort of blown away by, having a full performing portfolio. So one of these notes went non-performing, and it's in Michigan. And I happen to know that in Michigan now, there are funds, there's like specific government funding that's available out there to help homeowners and borrowers who are having trouble. And this specific borrower did have a job change and some job loss in the during COVID. So they qualified, but I had to still send the demand letter. So I sent, they were 90 days past due. I sent a demand letter. I communicated with my servicer. I said, I'm aware there's these funds. Here's the link, hint, hint, pass it along. I'm going to send the demand letter, and then they have so many days to respond. And so I'm now hearing from the attorney, and they said, so has there been any communication? So my servicer is the person talking to the borrower. I'm not talking to the borrower. Like, my servicer goes to the borrower and said, oh, here's the link. By the way, you're going to get a demand letter this week, but you should check into this funding that's available. So I want this borrower to get the funding. I want her to get the funding. Now, I've had to pay $95 a month, so that's a little bit more of an expense for me, but she may get, like, I don't know, 6 months paid for, and she's only 3 months behind. So if this happens, I'll be super excited. And it works for land contracts in Michigan. So these are some things that, that I, as a lender, I need to be aware of, but also I'm communicating these things to the servicers, so the servicers can advocate to the borrower as well. And I think they sometimes need the demand letter to actually get the money. So you would go, well, I don't want to, they should try to get the service, they should try to get the money. Well, they need the demand letter as proof that they need the money. So you have to go ahead and send these things out and make these things happen. And so, I mean, that's just like a way that I'm communicating with the servicer, but they're communicating with the borrower, and we're sort of working together on the same team. And then another thing is this payoff that came. I was like, okay, I have to approve the payoff. And I'm like, okay, I called the servicer and I said, can you just talk me through this? Because you want me to approve it, but can you talk me through it? And evidently there's like deboarding fees, right? So you get fees for boarding a loan, but you have deboarding fees or like closing out the loan fees. Help me understand this. Is this
So every servicer is a little bit different. I know when I worked at Madison, when a borrower asks for a payoff, by law, we are required to send the payoff to you as the lender first to approve or confirm. What that means is that you might have started foreclosure, right? And the attorney's invoicing you directly. I don't have that attorney's invoice. So you're allowed to recoup those fees. So more times than not, we're looking to make sure you did not advance taxes and didn't tell us. Okay. Just fees that you should be able to get back. Okay. So we make sure that you're like, hey, make sure all your fees are in here. You're not missing anything. You didn't forget an invoice. When servicers also will charge back to the borrower loan closing costs, like when a loan pays off, you have to draft a satisfaction or a lien release.
Right.
Some servicers will charge the borrower for that. Some servicers don't. There is no cost to you as a lender when a borrower requests a payoff. If at that point we ask them how good for, sometimes it's 2 weeks, sometimes it's 30 days, sometimes it's 60. It's whatever, the borrower's kind of feeling for, we have to give it to them. If you don't approve that payoff within about like 3 days, I have to send it, because by law, that borrower needs to get that payoff within 7 days of their request.
Right.
So you do have to kind of keep on top of at least your email. Right. Servicers will email you, but it's not that you're necessarily approving the servicer cost. You're making sure that there's no miscellaneous fees that you haven't had.
Okay. So for example, forced place insurance. So let's talk about that. So let's say I put some forced place insurance on this property, but I didn't tell the servicer. Could I get this money back, or what happens?
You can, but it's with the more recent CFPB ruling. if you're going to place forced place insurance on a loan, that is basically, for those of you who don't know, it is insurance that covers you as the investor. It does not cover the borrower. The only time an investor or lender would ever need to obtain this insurance is if the borrower can't produce homeowners insurance. You should always protect your asset. It's not, a rental property where it's like, oh, I have a security deposit. It's not that. If that house sets up in flames, there goes your money if you have no insurance. So you get to insure this property. Servicers do partner up with forced place insurance companies, but there are plenty of investors who have their own policies on their own. If you do not notify us that you have this and you can't produce the federal letters that needed to be mailed out to the borrower, you cannot recoup that money.
Right.
If you can produce the letters that were sent and you sent them per federal guidelines, you should be sending us a copy of that invoice every time you get it after you paid it, so we can add it as a charge or an advance to that borrower's loan. That is the only time. If you cannot produce those letters, no servicer is ever going to add those charges, which is why I tell a lot of people, if you don't have a large portfolio, it doesn't make sense for you to obtain your own policy. Go through the servicer. That is a big thing that I specifically zeroed in on with starting BIFI, because we have lenders in this space who buy conventional loans, which are traditional notes, mortgages, and deeds of trust, or land contracts, which have been pretty popular since about like 2016, 17 is when I started to see them. There are two different policies because they're two different loans. Technically, a land contract runs like a car title. You don't get the deed to the property until the loan's paid off. Where on a conventional loan, you're already on the deed and you just get a satisfaction when it's paid off. Those require two different policies. I learned that was a shocking lesson for me, 100% honest, last year, that there's a lender policy and an investor policy, and it depends on the type of loan. I do know that a lot of investors do obtain, especially as they're scaling their business, they do obtain their own policies, because what happens when you foreclose on this property? Let's say you couldn't work out a payment arrangement. The borrower wasn't going to pay off. They kind of just, did a deed in lieu. You took the property back. They walked away. You have this REO property. You still need to have it insured, though. Anything can happen. Mother Nature does her thing. And a lot of servicers don't actually offer insurance for REO properties. That was another issue that a lot of investors, they get excited. I have my first note. Okay, well, I have to take it to foreclosure, which happens. You go through the foreclosure process, and then usually the servicer divorces the loan and says, okay, you're sitting here with a property that's not insured. You don't have REOP. And at that point, a lot of servicers kind of like throw you to the wolves and say, fend for yourself.
Right.
That was a big issue for newer investors because they didn't know where to go. They didn't know what to do. So I know, at least with like myself and BIFI, we partnered up with an REO management company and made sure that our insurance policy also carried into REO properties, so that when you do foreclose on these loans, you're not scrambling. It doesn't make sense for one investor who has 3 notes. And the cost side of it, it's hurting their investment at that point.
Right.
So
this is really, really good information, Shante, because, there's so many moving parts. I mean, people used to say, well, why you so many moving parts? But when a servicer is involved, they are managing most of the moving parts, as long as you've given them the responsibility. So if you've given them, you pay the extra $15 or something for the escrow, then they're escrowing, they're communicating with the borrower how much to send, and whether should send for taxes and insurance or just taxes. And, they'll even collect the policy. So the insurance policy that, let's say the borrower does have their own homeowner's insurance, you can be listed as a mortgagee on their insurance, especially with land contracts or something like that. Or maybe it's just with no.
You'll always be listed on every homeowner's insurance policy as a lender.
Right.
You're the additional, loss payee here. So if something does happen and the house sets up in flames and you have to file a claim, you as a lender also get paid. So you have to, and your servicers should be adding that automatically. They should be. That does not mean ignore and just assume that they are.
Right.
Your job is also manage your servicer. As much as I tell everybody you're not supposed to, But just make sure, the borrower sent us proof of their declaration. It's not just for me to sit on. I have to make sure, okay, Melanie's entity is listed here, and it's going to read, Phil and Melanie care of, BIFI loan servicing, so that if there is an insurance check, it still has to go through us.
Right.
You guys won't be blindsided. It's not like there's money just missing, God forbid.
Right.
It goes through us. You should be listed on every policy. If your borrower has a policy, you need to be listed on it.
Right. And this is another very valuable piece, because we actually had a fire in one of our first notes, actually. And the other thing is, I got information from another Texas note that said they had insurance. So what I did is I asked the servicer to please make sure we were on as a loss payee. Well, as I was waiting, I was like, let me just call the number and see, maybe this is where I got a little bit too involved. I called the number on the insurance and I just said, my servicer, just so you understand, my company name is the bank for this note, and I want to be listed, on the insurance. So then they started wanting to charge me for the insurance. So it was a mess. Okay. And then I was like, why is the insurance so expensive? I mean, can she afford this? Like, she had just come off of a loan modification, and then she put like a massive amount of insurance on there. And I thought, okay, it is Texas. Okay, it is Houston. This is a problem because of the, it's a more expensive. It's called tier 2 or something. It's in this, like, if it's in a risk for flooding or wind. And it turns out the servicer had to do the outreach to the borrower, make sure she could afford it, do a new escrow analysis to figure out what the payment should be. So the servicer had to do all the communication, but I was able to catch it. So part of it is that you have to, like, it's nice to be like hands off, but you're still, as a lender, as an investor, you're involved. But you can just click on your portal, you just look at your notes, you just check and see how many days. If they're all close to 0, you're in a good spot. And then when you start seeing them go closer to 30, you go, okay, hey, can you check on, my borrower? Is everything okay? And then, then you just check back next month. So it's just staying involved. And I think, having someone on the other side, just sort of doing all the communicating makes it so much easier. So is there anything else? Shante, you covered a lot of stuff. I think this whole taxes and insurance thing is a big issue to talk about. Tell us about BIFI. Tell us about, I was happy to see all the different states you have, because if we originate any notes, we'll probably go with you guys, because, and I want to look at your pay, your funds, your fees and stuff. But tell us a little bit about BIFI. And I know when you board your loan, you have to have an account first. At least maybe you could talk about this, like the steps.
So in general, this is servicing across the board, not just BIFI. No matter what, before you can even tell a servicer that you want your loans to be serviced by them, you have to set yourself up. So whether you are buying your notes through a self-directed IRA, you are buying your loans through an LLC, I would never suggest you buy a loan through your personal name. You have to get that entity set up with that servicer. So every servicer has a servicing agreement they require you to sign. You have to sign a W-9. I can't send you funds, your borrower's funds, which are yours, without your tax ID information. And again, that's for tax reporting as well. And usually lenders set up on ACH, because who wants to wait for a paper check when we can kind of be direct deposited, and it's pretty simple. Out of the gate, you have to do that. The servicers are going to ask you, usually they have like a loan boarding form or loan setup form, which is kind of where you outline, okay, Shante Duffy wants to board a loan with BIFI loan servicing. It's non-performing. It's a land contract in Michigan. It is non-owner occupied. It is not in foreclosure yet, or hey, it's in bankruptcy. You give us as much information. You should have this already. That's part of your due diligence. You kind of outline that. Then you also provide us with your digital soft copies of your collateral file. I don't need the hard copy. I don't need the actual paperwork. I tell people, like, we have a company we partnered up with to house it. If you don't want to keep it with yourself, that's completely your choice. At that point, only when you have sent everything to the servicer should you now be telling your seller or the current servicer, transfer my loan to this company. At that point, it's that servicer's job to go through the deboarding process, which means, okay, I got to gather all the data, bundle it up really pretty, and to this new servicer. They send a goodbye letter that gets approved, which says, okay, the loan's transferring from BIFI to Madison. And then Madison gets the data. I give them all the figures. They board that in their system, but hey, you already gave them the collateral. They're cross-checking everything. Then when Madison gets it in their system, they send out a hello letter, which correlates to the goodbye letter. And it says, hey, your loan's being transferred. And at that point, you start communicating with the new servicer. It is a process. And I know this is like the one thing people don't remember. There's a method to all of our madness here in the servicing world. So this does not happen overnight. Servicing, there's RESPA guidelines where servicing transfers. If I send a letter today to the borrower saying, okay, your loan's being transferred, the earliest transfer date would be the 27th. So realistically, that new servicer doesn't have to have that loan boarded. The earliest date has to be, it could be the 27th. It takes time to verify all the data, go through the collateral. There's no surefire automation way to kind of make sure everything's there. So that does take time. Patience is definitely key, but don't give too much patience. Just, pay attention to the transfer dates. But overall, that process is the same across the board, no matter if you have one loan you're transferring or 70. I know I just boarded 60 loans the other day, which was a nightmare. The process is still the same though. It's just a lot at one time for one investor. So that process is actually the same. BIFI, I came from Madison Management Services. That is forever going to be like where my home was. Everything I know is from there. And BIFI was just kind of created because being in this space, most investors, you don't like servicers and you need us, but you don't want us. And I understand that. And, the servicing fees sometimes are really astronomical and very hard to justify. So with BIFI, it was a lot of the pitfalls that I would hear about, this industry talks. That's the one thing, if I know nothing else, we all talk. It's a very small industry. So everybody starts to know everybody as time goes on. There was a few, just some servicers are better at communication than others. Some are better at escrow. Some are better at handling bankruptcy. Some are better with foreclosures. We all have our strengths and weaknesses, but check in with everybody. The fees, be careful. Just because they're cheaper doesn't mean they're better.
Right.
And I've heard it all. And I've spent a lot of time with creating BIFI, thinking and talking to investors that I've worked with for years. And kind of sat on a Zoom call like this and said, all right, lay it out. I don't care the servicer. Tell me what you don't like. Tell me what you do like. So BIFI was created and it stands for Buy Investors for Investors. I have two business partners in this space who are actually clients of mine when I worked at Madison. And they kind of, they were the mouthpieces that were like, hey, we're seeing these issues. And it got to a point where I was like, there has to be a change here. We have to find a way to change this. And that's kind of where BIFI rolled out. They wanted to start selling. They don't know anything about servicing. They're like, hey, Shante, let's do this. So it was to be different because we want to actually hear what you guys need. If you're not getting something, if you don't like something, a lot of these servicers have been around for a long time, longer than I've been in this space, longer than I've been alive. This is not new, but I felt like it needed to be revamped. And I felt like, the servicing world needed to be shaken up a little bit. And again, I hated getting calls with lenders who, my job was, investor relations more so than anything. And that's what I love. I never really talked to borrowers unless I had to. And I still don't talk to borrowers unless I have to. But it was more so, this is a huge investment. This is either your money or other people's money. And for you to not have a good servicer or have an issue with your servicer and not feel comfortable enough to call and say, look, I don't like this, or hey, it would be helpful if I got this. I wanted to make sure that, it's 2022, like people can ask and that things can change and that we're using technology to its fullest capabilities and admitting where, there's some holes and kind of filling them. So, BIFI still does the same thing that every other servicer does. It's not really competition at this point. We all just do different things.
Can you show us the website? Because
Yeah.
I'm going to be able to make sure that people, and maybe put it into the chat, the actual link. And for those of you who want to buy your first note in the next few months, you can go ahead and already get your portal and your thing already set up. And so usually you would get a packet or, like she said, to set up your entity or yourself. And so this is something you can do now, even before you have your loan.
So if you don't have a note, I don't care if you don't have a note, set yourself up. Every servicer, for the most part, has an investors or a lender section. So ours will tell you, if you need help, where to email, who to call, but all your documents are here. This is what you need to set up your entity.
Nice.
So servicing agreement, W-9, ACH, these three can be completed electronically and submitted. I don't need the hard copies of it. The power of attorney, because it has to be notarized, that's when you have to download, sign, and go get notarized. When you're ready to board your loan, this loan setup form is the #1 form I need. If your loan needs to enter foreclosure, you'll fill out a foreclosure referral form. Again, this gets filled out as needed per loan. If you need a force-placed insurance, you'd fill out that form.
Say what TILA is.
So TILA stands for Transfer and Lender Act. And this is something that, let's say Melanie has a loan at BIFI already, and she's looking to sell the loan. Let's say I want to buy this loan from her and I want to keep it at BIFI. So I don't want to change the servicing, but she's not going to be the lender anymore. I am. What Melanie would need to do is sign this form that says, hey, I sold this loan to Shante Duffy, who wants to retain servicing at BIFI. At that point, BIFI is going to make sure that Shante Duffy is set up by making sure her servicing agreement is completed. As long as she's set up with these 3 documents, this notifies the servicer, okay, this loan needs to be transferred internally, which just means it goes from lender A to lender B. Nothing on the loan changes, but by law, your borrowers need to know who their lender is.
Right.
That's what that does.
How many days can pass between this? Is there a rule on how much time could go between?
Between what?
When you fill out this form,
your servicer should really kind of get this done within 48 hours. The only time that this, delays is if the buyer. So if I did not sign up,
okay,
I'm holding this up here.
Okay. Awesome. Well, we're sort of at the bottom of the hour, and I wanted to see if anybody had any last questions to ask Shante. If there's a few more things you need to show us on the website, I'm sure you can't open up a loan portal.
No, but I'm actually working on a demo. So when it's done, because I need to put some dummy accounts in there, I will send it to you so you can kind of share out with everybody.
Okay, we'll put it in like a little newsletter or something. So
yeah, if you have anything, just, whatever the case may be. And if you ever just want to give me a call, I'll walk you through it as well. I will do that for anybody. So.
Is there any questions for Shante? I mean, this has been super helpful. This has been great. I needed this before I bought my first loan, so.
But you got it while you had it, so it's okay. You did fine.
I had you personally over the call. So, well, thank you so much, Shante. It has been great. Happy birthday. I can't believe it. You're serving on your birthday. I really appreciate you. And I always enjoy talking to you and getting the insight of what's, even like I had a question about Pennsylvania or, questions about stuff. And I know I can talk to you and just get some insight on what's happening. So I appreciate your role, and congratulations on your new business. And
thank you. If you guys ever have questions, don't send me an email. Just say, hey, can we get in a call? I have questions. I will work around your schedule. I'm pretty flexible. For the most part. I want to help. You don't have to use BIFI. Again, you do not have to.
Right.
So if you just have a general question, like I'm too scared to ask anybody else, I'm over here like, no, let me tell you, so you know what you're doing, so servicers are actually impressed that these investors know.
Right.
So anything you guys need, no matter how small or big, if I don't have the answer, I'll refer you to somebody who does.
Right. And just both Shelly and Noriko say thank you, super helpful. Thanks so much. So it was just very helpful to get this information tonight. And we will be putting this up on our, saving it and putting it out as a note for everybody. So if you missed it or whatever, hopefully you'll get a copy of it. So thank you, Shante. Thank you, everybody.
Thank you.